Ladies and gentlemen, good day and welcome to Cipla Limited Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ajinkya Pandharkar from Cipla Limited. Thank you, and over to you, Ajinkya.
Thank you, Seema. Good evening and a very warm welcome to Cipla's Q1 FY24 earnings call. I am Ajinkya Pandharkar from the Investor Relations team at Cipla. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectation of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Cipla does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmation, future events, or otherwise. I would like to request Umang to take over, please.
Thank you, Ajinkya. Good evening to all of you. We appreciate you joining us today for our first quarter earnings call for financial year 2024. I hope you have received the investor presentation that we have posted on our website. We have also released our 6th integrated annual report for financial year 2023. This report continues to be a reflection of our commitment and focus towards improving transparency, governance, and setting best-in-class disclosure practices. I am pleased to share our Quarter 1 FY24 performance, which demonstrates strong commercial execution, sustainability, and growth in our focus markets. Now I'll cover the key highlights for the quarter. In Quarter 1 FY24, we recorded a solid 18% year-on-year growth across all markets. We had record revenue in both our flagship businesses of One India and the US. Our One India branded prescription business grew faster than the IPM as per IQVIA MAT June 23, driven by growth in chronic portfolio. US continues to scale new peaks by posting the highest ever revenue for the quarter once again on the back of momentum in our differentiated portfolio. In South Africa, the private market business has strongly bounced back from a challenging FY23, posting double-digit growth in prescription and OTC segments. South Africa prescription business is now ranked second by market share in the country as per IQVIA MAT May 23. Besides strong revenue growth, Q1 FY24 witnessed a strong EBITDA margin at 23.6%, largely driven by mix and efficiency in operations. In this quarter, we strengthened our balance sheet further, and in line with our strategy, we continue to allocate our capital towards multiple growth initiatives, complex pipeline, new science, big brands, and expansion of our consumer portfolio to make this growth sustainable for the longer term. I would now like to cover further details on our focus markets which powered the growth for this quarter. Our India branded prescriptions business continued its market-beating growth trajectory with a sustained momentum across all therapies by growing significantly higher than the IPM growth as per MAT June 23. Our share of chronic therapies in our revenue share grew from 58% to 60% on a year-on-year basis, with improvement in industry market share from 8.4 to 8.6. Continuing with our strategy of making big brands bigger, our leading inhaler brand Foracort clocked 27% growth in Quarter 1, which is one of the fastest among the top 10 IPM brands. Ibugesic Plus became the 11th brand to enter the top 100 IPM brands. Cipla is now amongst top 2 in terms of number of brands in the top 100 in the Indian pharma market. Our trade generics business maintains its market leadership, supported by traction in big brands. We continue with our launch momentum by adding 23 products in the portfolio to build our future. Our consumer health arm, CHL, witnessed a strong double-digit growth with margins reaching closer to mid-teens for the quarter, leveraging on our brand strength, market penetration, attractive consumer-focused packaging and positioning. Our differentiated portfolio in US continues to deliver strong growth for the franchise. The business yet again achieved its highest sales in the quarter by realizing a revenue of $222 million, growing by a strong 43% over the last year. Generic Revlimid continues to perform as per expectations, while Lanreotide has improved its market share to 18% as per the MAT May 23. Market share of Albuterol, which witnessed a drop in Quarter 4 of FY23, has now stabilized. We have not lost any customer awards on the product and continue to execute multiple work streams to capitalize on any new opportunities to grow this share further. In South Africa, we are pleased to share that Cipla is now the second largest player in the prescription market by market share. Cipla grew at a 4-year CAGR of 8.6% in the market, which is growing at 3.6% per the IQVIA MAT May 23. South Africa's private market grew 13% year-on-year, powered by an uptick in focused therapies in our prescription business, as well as a high growth of 16% in our OTC portfolio. Strong momentum across new launches has given our portfolio a new muscle for growth. Our focus continues to be driving market-beating growth, and we aim to inch towards the top position in the market in the next few years. Investing in the future pipeline has always been our priority. We have 3 differentiated products undergoing clinical trials, with filings targeted in FY24 and 25. We are expecting Symbicort to be filed by the end of this year. On peptides, we expect 4 to 5 peptide launches in the next 2 years. We also expect a couple of new peptides to be filed in the same period. On the regulatory front, we still await classification from the US FDA for our Indore facility, which was audited in February 2023. However, we have already initiated corrective actions for observations as per the Form 483 we received from the FDA. Implementation of CAPA and remediation continues for our Goa facility, where we hope to be re-inspected in the second half of this financial year. As informed in our last earnings call, de-risking has been progressing as per our expectations for our key assets. Generic Advair is being de-risked to an in-house facility while we await the Indore classification. As guided earlier, we are expecting to take this product to the market in a period of 12 months, with no incremental generic competition expected in that time frame. Generic Abraxane, which is nano-paclitaxel, is being de-risked to a CMO site. We expect the ability to supply from both of our sites for this file by FY25. I would now like to invite Ashish to present the financial and operational performance.
Thank you, Umang. This quarter, we further enhanced our performance across all our core businesses with expansion and profitability. We witnessed growth in all 3 of our biggest markets of India, US, and South Africa, supported by growth in focused portfolio of chronic and differentiated products. Coming to the key highlights for the quarter, we are pleased to report a quarterly revenue of 6,329 crores. The overall revenue growth for the quarter was at 18% on year-on-year basis. Our One India franchise further expanded its market share by growing at healthy 12%, supported by growth in chronic portfolio. The impact of NLEM pricing for the quarter has been largely offset by multiple measures. New launches contributed to the growth in branded prescription business, with our in-licensed products, Galvus and Scapo, contributing to the list. The U.S. business reported the highest ever revenue, driven by traction in differentiated portfolio with revenue of $222 million, growing at 43% YOY. South Africa grew at 13% YOY in local currency terms, powered by a solid performance in private market, including OTC. Amidst geopolitical and currency headwinds, the focus of international markets has been on margin expansion, which has aided our Q1 performance. Our free cash flow generation and operating efficiency continues to drive our healthy net cash position. Our EBITDA margin stood at 23.6% for the quarter on a reported basis. As always, this EBITDA margin is not including other income. Our EBITDA margins for the quarters include impact of higher R&D expenses and other provisions. R&D investments are driven by ongoing clinical trials on differentiated portfolio as well as other developmental efforts, higher in the quarter by 27% versus last year. Our reported gross margin after material costs stood at 64.7% for the quarter, which is 230 basis points above last year's figures, driven by contribution from new launches and overall mix change. Total expense for the quarter included employee cost and other expenses, which stood at 2,598 crore, up by 3.8% on a sequential basis. Total R&D investments for the quarter are at 349 crore or 5.5% of revenue, and what, like I said, 27% higher on YOY basis. Profit after tax for the quarter is at 996 crore, so close to about 1,000 crore, at about 15.7% of sales. The effective tax rate is constant YOY at 27.5%. As of 30th June 2023, our debt primarily constitutes 720 million rand in South Africa, with cash equivalent balance at a company level of 6,941 crore. This results in improvement of our cash position from 5,469 crore in March to 6,138 crore in this quarter. And looking ahead, we continue to walk on the path of revenue growth and operating profitability. Growth levers in the subsequent quarters will include continued market-beating growth across One India businesses of prescription, trade, generics, and consumer health. Robust traction in our North America franchise across complex portfolio and continued contribution from respiratory and peptide products, creating a more resilient business through de-risked portfolio and supply. Sustaining performance of quarter one for South Africa with focus on private market, select tender, and improving the margins in South Africa. Drive growth in focus geographies in international markets. We expect the full year EBITDA to be trending towards 23% for the year. I'd like to thank you for your attention and request moderator to open for the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Sayan Mukherjee from Nomura Securities. Please go ahead, sir.
Yeah, thank you. Good evening. Umang, this quarter-on-quarter improvement in the U.S., what do you ascribe this to? Is there a big Revlimid contribution? And in the next few quarters, how we should think about it?
I don't think the Revlimid contribution quarter-on-quarter is significant, Sayan. I think the base business has also grown very impressively between quarter 4 and quarter 1, and of course between quarter 1 of last year and quarter 1 of this year, we have seen our base business also grow tremendously. So I think quarter on quarter there is not a material difference in Revlimid between quarter 4 and quarter 1.
Okay, thank you. And my second question, Umang, is on the future pipeline in the U.S. So you mentioned about 4-5 peptide launches. Lupron Depot seems to be, having low market shares. How should we think about the potential of these peptides? And also particularly on Abraxane, is the bottleneck just around the site, or are there any queries on the file that we need to address there?
Sayan, on Abraxane, we have received notification that the only thing pending on the file is the site.
Okay.
And on your other question, and I'm sorry, that was on Luprolite, I think you will begin to see share gains because that we were waiting for certain price approvals in the market and certain codes being assigned, which is now done. The codes have been assigned, so hopefully you will see increase in market share there.
Okay, sir. Thanks, Umang. I'll join back.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Rohan Vora from Purnartha Investment Advisors. Please go ahead, sir.
Thank you so much. So my first question was, what would be the guided capex for FY24 for Cipla?
Yeah, so we stay at about 5% of the revenue, 4 to 5%. So somewhere in the range of 1,000 to 1,500 per annum is what you could take as the capex, which can be in the area of sustainability, modernization, as well as in some cases capacity enhancement.
Understood. And what part of this capex would be attributable to solely maintenance, wherein, that would not lead to any kind of capacity expansion, just pure maintenance capex?
No, without giving a split, I think, it's a combination of both capacity enhancements in API and formulation, as well as there is maintenance capex. And, they can be small when you're de-risking some of these assets of the U.S. portfolio. There can be small capex on account of that as well.
Understood. So even a broad range would be fine, workable. Just a broad range would also do. What would be the maintenance and the normal capex split? I was looking for that.
You can take about 50-50 roughly of maintenance and growth.
Sure. Just the last question here. I was also, looking to understand this maintenance capex. So would this be, in nature of what kind of equipment are we looking at? What is the addition that would be made to our business as a whole? And just a little understanding, for just my understanding kind of sake. Yeah, thank you.
It's again sustainability related, environment related, and the maintenance. Sometimes in some of the plants you have to take shutdown to make sure that the equipment are properly functioning, improve efficiencies, etc.
Understood. Thank you so much.
Thank you.
Thank you, sir. The next question is from the line of Mr. Tushar from Motilal Oswal Financial Services. Please go ahead, sir.
Yeah, thanks for the opportunity. So just referring to your earlier comment of, the US or the North America growth more led by non-generic Revlimid. So what is driving the growth in terms of, is it because the competitors are having the regulatory issue and that's why we are able to gain market? Or is it because the price erosion itself is getting limited? If you could throw some light.
I think it's a combination of various factors. Price compression is obviously lesser than before. At the same time, we are seeing, I think one has to also look at what is happening in the U.S. A large number of U.S. companies are either amalgamating, merging, or are going bankrupt. That is eliminating certain number of people in the system. It's also having an impact on certain channels in the U.S. which only buy products which are made domestically. So we are seeing, a rebalancing of the supply chain happening, because of which our base families are actually growing. And then obviously we are seeing a resurgence in our share in products like lanreotide. And then we are also seeing, at the same time, certain buying programs of different channels being serviced very differentially. So I think that's the thing we are seeing. So it's a combination of factors. I would not attribute it to a single factor.
Understood, sir. And so compared to in the previous quarter guidance of 22%, and now we are talking for 23%. So broadly, what has changed? That gives a confidence of 23% EBITDA margin.
Sure. No, so I think it's our target that we've taken. We've had a good quarter in this quarter one. So it gives us some confidence that we can take up that target of delivering 23% for the year. And you have to bear in mind that, seasonality of each quarter as well. So that also plays a role. So we've had a good quarter, but overall we target to 23%.
Understood. And just lastly on Indore, while the classification is awaited, but has there been any feedback from USFDA apart from classification to understand particularly ultimately to the generic Advair approval and launch?
Yes. We have heard that generic Advair is now only pending facility. And therefore, the fact that it is not yet cleared right now means the facility is still under evaluation. Having said that, the whole Advair transfer to another facility is underway. The facility is getting ready for this in the US, and very soon the transfer activities will start.
Okay. That's it. Thank you, sir.
Thank you, sir. We take the next question from the line of Mr. Kunal Dhamesha from Macquarie. Please go ahead, sir.
Hi, thank you for taking my question and congratulations on the good set of numbers. Just continuing on the Advair, so I believe that we would need to be filing some amendment to our initial ANDA. So some color as to whether that would be a major amendment or minor amendment, and have you already filed it with the US FDA or are we expected to file it in some time?
No, it will be expected to be filed. They are still in the transfer stage right now. And yes, it will be, the chances are it will be a major amendment.
Okay, and is there any guidance from USFDA as to what time do they take for the major amendment or something?
No, we don't have it. We don't have. Generally, it's the outer, it's about 8 months. If it is sooner because, it's a limited generic, then it could be sooner within that period.
Sure, thanks. The second question is on the US generics overall market. You said there are some buying programs of certain channels. Are you kind of referring to some of the shortage products where there are short-term tenders which comes up, or is it some channels like Veterans Administration and stuff like that?
It's a combination of all of those.
And let's say in the the public data suggests that the US drug shortages are at an all-time high. So are we seeing, I think commentary says that on a portfolio level we are still seeing some price erosion, but in those shortage products, are we seeing a very good, very good double-digit price hikes in your view?
I don't think there is a general rule that prices have gone up across products which are in shortage. I don't think that's happened. I'm not sure that is what has happened. It's just that the price pressure environment is lesser. So I think those are the two factors we are seeing.
And last one from my side. So the 222 million, revenue run rate, do you think it can sustain going forward in the coming quarters?
I think our base level will be somewhere in the range of 210 to 215, which is the quarter. I mean, what I meant by 210 to 15 was what we will be reporting broadly going forward, quarter by quarter. But if you were asking whether our base business would be slightly short of that.
Sure. Thank you. I'll get back in the queue.
Thank you. We take the next question from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. Umang, coming back to Advair, so should we assume, like you mentioned, 12-month for transfer, right? The transfer to the additional site, and then there is a timeline associated with amendments, etc. So broadly, should we assume this opportunity is now beyond FY25?
No, not beyond FY25. Beyond this year, if Indore is not cleared, yes, but not beyond FY25.
Okay, so if we consider all timelines, it could still be a 25 launch opportunity for you.
Yes. With a transfer to a new location, definitely it's going to be a 25 opportunity.
Okay, and my second question is if you can update us on your initiative in the India business, because last quarter you mentioned about adding MR. So that's first, and then if you can talk about your strategy in the three segments, RX, GX, and the CHL part, that would be helpful.
Yeah, so I think strategy in GX is to be strong in the distribution side of the tier 2 to 6 markets, which are seeing a large amount of volume growth. I think we have a good portfolio family. So this market continues to expand. I think on RX, our branded franchise is doing really well. And we are, the therapies that we are working on are growing. Our respiratory therapy, we are growing share in cardiac. Diabetes, we used to be nowhere. We're now number 8. We're still growing strong. Addition of portfolio through Galvus. I think if you look at the cardiac segment, the whole focus on heart failure, structural heart diseases, I think that's where we are focusing on. Urology is also now, we've fixed our execution issues. I think we're bouncing back there. So almost all therapies are firing on all cylinders. Our new product launch pipeline for the India market has been pretty significant. And overall, in terms of reps, we have added about 250 to 300 reps already in this quarter.
So total is like 1,000 MR addition for this fiscal, right?
Right. Hopefully by the second quarter, we would have added close to 400 or 500, and then we will probably stop at that for the time being.
Sorry, under 400, 500 by second half?
We will be at 500 net additions by quarter 2.
Okay.
And then we would stop because our program started sometime in quarter 4 of the previous year. So we have already added some reps in that time. Then we've added 250 in this quarter, and then we'll add perhaps another 150, 200 in the next quarter.
Okay. So on the RX part, now with most of the issues fixed and MR addition coming to an end, etc., you are confident about maintaining above market growth on the RX segment?
Yes. We will be maintaining higher than market growth.
Okay. Thank you. I'll get back in the queue.
Thank you.
Thank you. We take the next question from the line of Mr. Surya Narayan Patra from PhillipCapital India. Please go ahead, sir.
Yes, thanks for the opportunity, sir. Just one clarification about the U.S. business. We are almost approaching the 12-month post our launch of Revlimid in the U.S. So any sense of what is the kind of volume share that we are tracking in the U.S. And also the kind of a ramp up what we have seen in the U.S. business, to some extent it is not matching with the kind of ramp up in the prescription numbers for Revlimid. So if you can clarify there a bit.
Yeah, I think what you're looking at is is a little different. I think the issue is that you are trying to correlate the Revlimid business with the entire gain that's happened in the US, and I don't think that's true because I think our non-Revlimid portion has also gained significantly.
Yes.
So, across categories we've seen higher share, either higher share or, as I mentioned, buying programs that buy domestically, or a channel readjustment that's happening in the market. So, or shortages, right? So I think even our existing families have done well. And certain new launches, we've got disproportionate share of the market. I'm not sure we would like to give share in the Revlimid because, frankly, it's from a volume perspective, our volume shares are actually negligible or really marginal. So I don't think that's the right metric to track on this launch.
Oh, okay, fine, sir. Sir, just extension. Have you seen any kind of meaningful correction in the albuterol revenue base sequentially in the US?
Yes, we've seen a slight decrease in albuterol. I think that's linked to our share decrease, which we think is stabilized now. There was a situation in the market where the largest family of albuterol in the US, which was the family of ProAir. That one had, unfortunately, there seemed to be some kind of a supply imbalance there, because of which a few families, non-ProAir families, stepped up to take share. And I think now we're seeing a little bit of that readjustment, but we are hoping to grow from here, from the share we have right now.
Okay. Just last one question, sir, from my side regards the domestic business, there is some interesting developments happening. And one is that obviously one of the key large-size competitor is also moving into the trade generic business. Now, in the last 1 year period, possibly we have seen almost all the participants in the domestic formulation have either expanded their portfolio or extended their reach or expanded their field force. So in a way, it is all these are creating kind of a competition only. So hence, do you kind of anticipate margin pressure or the profitability challenge for the domestic business? And also, considering this competition in the trade generic, do you see any major dynamic changes in the domestic market, sir?
No, actually, we don't. There was this issue of pharmacies earlier. That issue now seems to have stabilized a bit. There was the issue of pricing compression. I think that doesn't seem to be impacting the market. And I think the realization is that there is very strong growth in India right now. And there's strong volume growth and there's also strong new introductions growth. So that's one aspect. Second aspect, 60% of our country and more lives in tier 2 to 6 cities. They're becoming more accessible. They want more access to healthcare and they have the ability to pay for it. I think that's one switch where the trade generics begins to capture the market, and also some of our strategies are to focus our larger brands in this area of the market. So we don't think there's a that it's trade generics versus branded generics versus consumer healthcare. These are all parts of the same market. You can't look at the total market with just the India represented with metro and tier 1 or the Bharat represented with tier 2 to tier 6. It's actually a combination of the total space.
Okay. Sure, sir. Thank you. Wish you all the best.
Thank you, sir. We take the next question from the line of Mr. Ankush Mahajan from Axis Securities. Please go ahead, sir.
Thank you, sir, for taking my question, and congrats for good set of numbers. So, sir, in the U.S. market, as the revenue run rate we are looking, the last quarter you said that revenue rate is in the range of $200 million. Now we have increased it to 210 to 215. So, just try to understand that this G Revlimid, how many quarters we can get the revenue? Basically, what is the contract? Can you throw some light on it? So it's a business for next 2 years.
No, I don't think I can give you a guidance that far out. All I can say is that, from the last quarter, we were at 190 to 200. Now we are at close to 210. That's a reflection of what we think our product families are doing in the U.S. Right. So in the next quarter, if we find that some of our families have fallen off, we will come back and tell you that this is the base level of our business that we are looking at. Right now, we are feeling quite comfortable with the 200 to 210 trajectory, which is what we've indicated.
I agree, sir. Sir, another is the extension of another part that you said that about some buying programs and channel readjusting. So would you throw some more light on, sir, these things?
Yeah, there are some buying, there are some customers who only buy from locally made product, right? So that is one readjustment as U.S. companies begin to get, are either closing down or are going through amalgamation. That's one disruption. There are some buying programs which focus on buying for sustainability versus buying for necessarily price, right? And sustainability could be sustainability of environment, sustainability of supply. So these programs are fairly active considering the shortage situation right now, and I think that creates an opportunity in some of these segments.
Thank you, sir. Thanks so much.
Thank you, sir. The next question is from the line of Ms. Neha Manipuria from Bank of America. Please go ahead.
Thanks for taking my question. Umang, on the U.S. number that you mentioned, 210 to 215 million, just to clarify, this is the base that I should assume on top of which we add the new launches that you talked about, the peptides and, share gain in Leuprolide and all of that. Is that the right way to look at it?
Yes, broadly, yes.
Okay. And on the peptide launches, would this be back-end weighted? Is there anything that is required? Is Goa critical for the approval of these products, or these are third-party and therefore not so much dependent on Goa?
So this is completely third-party. We don't have any dependence on Goa on the peptide family. We don't also have dependence on Goa or Indore for a large number of other products.
Okay. Understood. So the only thing pending for these launches is essentially approvals?
Are essentially nano-paclitaxel, which is getting de-risked, and Abraxane.
Yeah.
And Advair.
Okay. Understood. And on the India business, I understand your comment in terms of, trying to broad base our presence. We are also adding MR. But if I were to look at, the profitability of India business, are we able to improve the profitability of India business, or is a lot of that growth also requiring us to increase investments given the competitive intensity in the market?
So we are hoping to improve, and we are improving our profitability, Neha. And the reality is that in India, our experience is that an addition of a rep in India leads to a payback within a 6 to 9 month period. So it's not that long as a thing. So I don't think the investment, India is as investment heavy in terms of trying to get the incremental rupee of sale.
Understood.
There is also a product mix in India that we focus on. So as we continue to increase the chronic portfolio, so that will also have a positive momentum to your profitability.
Understood. And Ashish, in your opening comments, you mentioned, I think, provisions that were included in the quarter. Could you just throw some color on that? Or, is this meaningful provision that we're talking about? Where exactly is it included?
Yeah. So I think, every quarter we have certain provisions on account of either expiries or, those provisions continue to be there. I think only, some one-off would be, we had some recall in the U.S. market. So, the recall cost has also been provided for in this quarter.
This is not the Advair recall that happened recently?
No, not albuterol. It was an albuterol recall.
I mean albuterol recall. Sorry, my bad.
Absolutely. So we have made some estimations for it.
Understood. Okay. Thank you so much.
Thank you. The next question is from the line of Mr. Krishnendu Saha from Quantum AMC. Please go ahead, sir.
Yeah, hi. Thanks for taking my question. Just quickly again on the US front, how many launches did we have? Just try to understand the incremental, like 220, the largest amount we ever had so far. How many launches did we have last year? So that does contribute a high amount for this Q1 with the launches, heavy launches last year, besides the niche launches?
Yeah, actually, if you look at our portfolio strategy, it is not predicated on necessarily the large number of launches. I think over the last 2 years, our average will be sub 10 on each year.
Right.
But we go for ones which are meaningful, which we think are meaningful. Some of them don't turn out to be meaningful because the market competitive environment has changed. But of the 7 or 8 that we have launched in the last year, my guess is that about 3 to 4 of them have been very meaningful for us. And that's how we'd like to look at it, that if we file 15 products a year and we have the opportunity to launch between 10 to 15, 30 to 40% of them should be fairly meaningful launches which bend our trajectory upwards.
Sure. Okay. All right. And let's think just a little bit on the Pfizer plant. I don't think we can take any advantage of the Pfizer plant being destroyed by the tornado, typhoon, or whatever it was in the US, right?
Yeah, so I think obviously there's a lot in the press on the Pfizer facility. I think the issue, obviously, it's my opinion that no one facility can step up immediately. We have also heard that, there seems to be some amount of impact to their stock holding as well. And therefore, We are waiting for more details. If there's anything that needs to be done to step up to supply, we will. But we do not have explicit details on which product families are needed immediately.
Oh, okay, but you don't have any idea as to how many products would overlap or something like that, right?
Well, we have some rough idea, but there is no official intimation of a shortage for any of those products as yet.
Yeah, it could come sooner or later. So we have the wherewithal to handle this in the future. That's what I'm trying to understand.
Yeah, I would just say we have the wherewithal, but it's from Goa, and Goa right now is not...
Yeah, I see. Yeah, I forgot that. But yes, right. Just on the Abraxane part, it's all dependent on the site transfer now. So is this going to get pushed over a little bit to 26 or 25 for September?
No. I think we are looking at it in the later this year or early next year, actually. I don't think we are looking at this beyond that.
I see. And last question, just on the domestic side, I suppose our consumer health is 385 crores, roughly around 14% of the revenue. How do we see that basket? How do we, what do we concentrate on? When I look at our portfolio, what do we see? How do we increase? I'm trying to understand which basket do we address to increase women health, a little bit of infant care. What do we do next to get there? And if you could also speak about a little bit, we have a lot of investments in MNRA, CCART, how are the biosimilars and so on, so forth, which are high-end stuff. So how do we see the investment? Do we do balance sheet investments or do we do, all by ourselves? Though I know some investments are there, so can you throw some light? That's it. Thanks.
So see, I think there are 2-3 buckets of investment. Towards the end, you talked about mRNA, etc. Those are for the future. We continue to make some option investments just to make sure that we continue to have our foot in the door in the science and have a commercial right over those products.
Sure.
And just to respond to your earlier question on CHL, which is a consumer business, I think we're seeing we are very excited about that business because that's a business which we realize that more people want to stay well longer than they are sick. And this is a business that allows people to be able to do that. So we think the categories we are in, which is pain, the category that we're in, which is dehydrating solid, rehydrating liquids, cold and flu, cold and cough, these are amazing categories to be in. And over a period of time, we will open a franchise here for women and mothers and child. We think that that's a big segment as well as skincare. And our objective is not to be centric to just one brand. If you look at our portfolio, we want to be well diversified here because this is a branding game and not be dependent solely on a single product or portfolio.
So, but it's going to be the doctor approach, right? Still.
Not necessarily. Right. This will be advertising. And wherever a doctor support is needed, it will be provided by other constituents of the One India business.
I'm sorry, last question. How much is trade generics products as a percentage of revenue?
How much is trade, sorry, can you repeat? How much is trade generics?
As a percentage of revenue, Indian revenue?
I'm not sure we're giving that level of detail. Okay. But I can tell you that, overall the market is about, 25 to 30% of the total Indian pharmaceutical market.
Yeah. Thanks a lot. Thanks for this.
Thank you.
Thank you, sir. The next question is from the line of Mr. Binu from Elara Capital. Please go ahead, sir.
Hi. Good evening, and congrats on a great set of numbers. Umang, you said between now and the launch of Advair, you don't expect any incremental competition. What is the scene with Abraxane? I'm asking this specifically because I see that Teva got an approval recently, but I'm not sure if they have launched.
Teva was, to some extent, the first filer on this product, on nanopaclid acid. So we have not heard of their presence in the market as yet. I think it's a phased launch that will probably happen over a period of time.
Okay. So possibly they will be there in the market when you come.
Yes.
Get in. Okay. And do you have any, what's the scene on the market right now in terms of the one or two AGs in the market? What sort of share they have taken? Do you have any update?
Yeah, our understanding is, that the market is supply constrained. And therefore, nobody seems to be getting enough amount of product. That's the position right now. So the AGs are probably selling what they are getting and not more than that.
Got it. Second, there's this product in which you have a filing in generic Dulera, that is Momentazone plus Formoterol. Is there any update? Do you expect any launch in the next 12 or 18 months?
Is your question specific to Europe or US?
US.
I'm not sure we have that product in our portfolio,
Okay. Great. Thank you very much.
Thank you, sir. The next question is from the line of Mr. Kunal from Nuvama. Please go ahead, sir.
Hi, good evening. Umang, you mentioned that a combination of factors that led to the US growth, right? So would one of the factors be higher primary sales than secondary sales? And by that I mean wholesalers accumulating more stock because of fear of shortage?
No, I don't think so, because our, we do our regular audit processes for chargebacks, and inventory in trade is an input into that validation, and we haven't seen inventory holding going up.
Got it. And secondly, of the 12% growth in India, would it be sort of fair to understand that the Galvus, contribution could be around 2% or so?
What contribution? The new product?
Yeah, the new product which you acquired, yeah.
Yes, I mean, overall new products will be, I think, 2 odd percent. I think Galvus would be slightly less than that.
Got it. And one more, if I can squeeze in, and you mentioned on Abraxane that the market supply some constraint. I think it's a bit strange. Apotex got some decent enough share in the market, then again the share has completely fallen, and the innovator has clawed back almost the entire market. So maybe could you throw some more light on that?
Actually, I don't know what specifically is happening, but we can only hear from we only hear routinely from the buying channels in the US, and I think what we've heard is that periodically there's been product that the AG can sell, then product that the brand can sell, then product again that the AG sells. So it seems to suggest that, supply is constrained.
Okay, got it. Thank you. Those are my questions. All the best.
Thank you.
Thank you, sir. The next question is from the line of Mr. Tarang Agarwal from Old Bridge Capital. Please go ahead, sir.
Hi, good evening. Thank you for your time and congratulations for an extremely strong set of numbers. 2 questions from my side. In the wake of developments in the US, are you witnessing any changes, in your interaction with your customers? There seems to be a heightened apprehension around supply shortages. And while shortages are cyclical, their impact seems acute, especially in some specific therapies. So is it resulting in some sort of a structural change in the operating environment? Just wanted to get your sense. So that's one. And the second, the cash pile, is accumulating quite nicely, about 6,000 crores. And there is reasonable visibility in terms of how the business, especially in the States, would track. So how should we see the deployment of this? Some broad, areas where we could see this deployment. Thank you.
Sure. I think on the deployment front, I can take that question first. I think we do see growth opportunities in India. I think if you want to capture that opportunity, organic has its own limitations, so therefore we can constantly evaluate inorganic opportunities in India, which actually pays off well, and it is within our expectation of hurdle rate. So India, we will continue to look at opportunities. And then even in South Africa, which is our core market, we want to grow to number 1 position And of course, within the hurdle rate that we follow, the cost of capital for the country. So I think the focus will be to do acquisitions, small acquisitions though, in South Africa, in US as well, wherever there are white space, wherever we find some interesting product in our core strength, which is respiratory and some of the other portfolio as well. We would look at opportunities there as well. So inorganic will play a big role in fund deployment within the cost of capital. Other than that, there is capex, there is increased R&D, there is and of course we constantly discuss at the board level on how to best utilize the capital. Sorry, your first question was, if you could repeat, Paruma.
So basically, I wanted to understand if the shortages that we are seeing in the market, while the shortages are transient, but is it, resulting in some kind of more longer sort of a structural change in the market in the way maybe the channel is behaving or your interaction with your customers?
No, I think they want certainty of supply. I think that's a key thing. And for a person who's our customer, not having supply is their biggest nightmare. So obviously they want more certainty of supply and and obviously quality supply. So I think that's what we're hearing more of. So I think, yes, maybe there is a little bit of realignment to get more sustainable supply.
So does it translate into some sort of a change in the manner in which they're contracting, versus what they used to do previously only maybe perhaps on the pricing? Are they willing to pay a little extra maybe for a sustainable supply or, not letting a new customer, new vendor come in that easily to supply if a sustainable player is already operating?
We haven't really seen that in our interactions as yet.
Okay, thank you.
Thank you. We take the next question from the line of Mr. Abdul Qadir Puranwala from ICICI Securities. Please go ahead, sir.
Yeah, hi. Thank you for the opportunity. So a couple of questions on the India front. So this quarter we highlighted that the chronic therapies have been growing. Would it be possible to quantify the amount of field force? What do we have on the chronic versus on the acute side?
Yeah, I think about 75 to 80% of our people are on the chronic side. 20% or so are on the acute side. Now, chronic for us includes respiratory. So I think that's something you need to keep in mind. Broadly, we have about 10,000 odd people, 10,000 to 10,500 odd people. And within that, respiratory is, the largest share of reps in that one. So acute will be roughly about 2,500 or 3,000 people.
Understood. And second, on the consumer bills in the India front, so this quarter again on the revenue and margin front, I think we've done a phenomenal job. I just wanted to again understand here that is this due to some bit of a seasonality wherein we saw some, extended summer period in June, or and then how does the full year expectation is? That is, earlier we were planning, we are factoring a mid-teen for the entire fiscal 24, but we have achieved that in Q1. So are we internally raising our, margin estimates for the consumer business when we talk about this 22 to 23% shift to what has probably happened, apart from, what the performance in the US has been?
Just 1 minute. Yeah. So we only got parts of your question because the line was bad. Let me try and just highlight what you wanted to know. The first was the seasonality in the consumer healthcare business. Then we lost you where it was 22 to 23. I didn't quite get the connection with the 22-23%. Can you please explain that?
Yeah. So this 100 bips improvement in your margin guidance for 24. I mean, is that factoring from the uptick what you have seen in India this quarter? So that will largely continue for the quarter ahead along with US, or it's largely US which is raising that confidence?
Okay, thank you. So the confidence is raised by all our markets actually. It's, even though we may think that the percentage increase because the US and India do better, they are larger businesses, but frankly, if South Africa does better, our margin profile improves dramatically because the South Africa business gets a tremendous leverage from top line growth. So it's all our businesses that raises our confidence profile of our EBITDA trajectory. On consumer business, we have a large category in oral rehydrating solution, the ORS. And I think this time the summer unfortunately only peaked sometime in the north in some part of June because the rains came earlier and there were rains throughout the summer. So actually we have seen a slightly more muted quarter than we had expected in our consumer healthcare business. Having said that, quarter one, quarter two are always the largest in this business. So we've not had a full season this time the way we would have liked to see it in the consumer business. But despite that, it has shown the type of growth it has.
Got it. And one final, if I may, this is again a follow-up from what the earlier participant was asking. So when we're talking about the supply chain rebalancing, so from a volume front, when a few players are exiting the market, so the incremental flow of these volumes, how is that getting captured? Is it that the buyer groups have been trying to be a little conservative now, and they're not assigning the entire or the lion's share of the volumes to one supplier alone, and this is getting scattered, or the trend largely continues to be the same, that the largest guy keeps on becoming larger here?
No, I think it's a diversification of sources for sure. I think that's happening. At the same time, I think the discussion is also on longevity of the contract. So I think both of those issues are happening at play.
Sure, got it. Wish you all the best. Thanks.
Thank you.
Thank you. The next question is from the line of Mr. Shrikant Akolkar from Asian Market Securities. Please go ahead, sir.
Hi, thank you for the opportunity. Congratulations on the good set of numbers. My questions are pertaining to the price erosion. So can you please provide your current thinking on the sustainability of the currently easing price environment as well as the shortages in the US generic?
I think we've answered that question, but I'll repeat it. I think we see that the price erosion is kind of stabilizing now because of the number of people who have exited the markets and the pending restructuring that's happening in the US-based companies. So the shortages are leading to some of that. Some of that is being led by the rebalancing of trade channels. So yes, pricing pressure is abating a bit.
For the rest of the calendar year or fiscal year, how do we see that? Is it will it remain in the currently easing environment, or do you think that there is a possibility the higher supplies would come in and the price erosion would go back to the normal levels that we have seen in the last year?
I'm not sure I can only talk about the current quarter because, this is a trend that responds to the number of players and the type of launches. So in the current quarter, we think it may be like quarter one. I can't give a view of what will happen in quarter three and quarter four.
Understood. One more question on the price erosion is it possible for you to break down the US portfolio in a couple of buckets and provide some color on what proportion of your US portfolio is seeing price erosion or is benefiting because of the shortage situation?
I'm not sure we give that level of detail. I think we look at an overall number of price erosion and we factor based on that, which used to be at a higher level of high single and double digits is slightly reduced a bit now. It's very difficult to characterize which family sees an increase now because it's a factor of mix, it's a factor of price adjustment. So that's why we don't give clarity in that regard.
Okay. Okay. And last question on albuterol inhaler recall recently that we have done. So what is our challenge and have we resolved this issue currently?
Yeah, the challenge was for a specific number of batches, and I think those we have recalled. I don't think we saw the same issue in other batches. We have done an analysis and we feel confident about it.
All right. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Mr. Krishnendu Saha from Quantum AMC. Please go ahead, sir.
Yeah, hi. Just thanks again. Just a clarification. Abraxane, it was not our own development. We got it from someone, right? I'm just sketchy about that thought.
No, it is the Cipla product. Abraxane is ours.
Sure. Thanks. That's it.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Ajinkya Pandharkar for closing comments. Thank you, and over to you, sir.
Thank you all. Thank you for joining us for the earnings call. If you have any questions, please reach out to us at investor.relations@cipla.com. Thank you and wishing you a very good day ahead.
Thank you. On behalf of Cipla Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.